The vast majority of us here in the UK purchase a home with a mortgage. But did you know that there are as many as 25,000 different mortgage products available on the market? With so much choice, this can be overwhelming, and you might not know where to even start. Well, I'm here with Beth today. She's a mortgage broker, and she's going to answer some of your burning questions about mortgages. I'm Jack Flower. I've been an estate agent for many, many years now. I started my career in London, where I worked for some of the largest corporate agencies, and now I live and work in Bath, where I've got my own company, Flower Property. We do residential sales, lettings, and property management. Welcome, Beth. Thank you for joining. Firstly, tell us a little bit more about yourself.
Well, thanks for having me. It's good to be here and talk about, obviously, something that I do every day. So I'm a mortgage and protection advisor. So of course I talk about mortgages, whether it's residential, buy-to-let, holiday-let, limited company mortgages, whatever it is that my clients will have a need for. And then I also look at the protection side of things, so things like your life insurance, income protection, critical illness cover, family income benefit, because obviously by having a mortgage, essentially you've got a six-figure loan that you're going to need a bit of cover for, just in case you can't bring in an income or something sort of worse happens, of course, that means that your finances are jeopardised essentially. But yeah, with my career, it goes back, well, I suppose over a decade now, showing my age. But yeah, I started off in lettings in Bath and also worked in residential sales as well. So that gave me a really sort of a taste for sort of the property industry and a real interest. After that, I thought I'd try working in finance for a bit. So I worked in pension servicing, which is a little bit kind of out of the ordinary, considering that I loved property, but I just wanted to sort of give that a go and see if I enjoyed it. And I did like the sort of the financial side of it and the regulation side, and I quite like rules. I'm a bit of a geek. But yeah, I sort of I liked the aspect of property and the aspect of financial services, and obviously that's what's kind of ultimately led me into mortgage advising. So yeah, I really enjoy what I do, and I love helping people. Yeah, that's me in a nutshell.
Now, many people, when they're looking to get a mortgage, might go straight to their bank. But also you're an advisor or a broker. What are the advantages of going to yourself as opposed to going direct to your bank?
Yeah. So yeah, there are plenty of advantages. So as you say, we get access to thousands upon thousands of products every day. We've got any broker will have dozens of lenders available to them. So yeah, if you're going direct to your bank, they may well be able to help you. They might be able to lend on that particular property and give you a decent interest rate and give you the money that you need. But 9 times out of 10, that's not likely to be the case. So, I've had clients where they've said, I've banked with my bank for 20, 30 years, and, I think they can give me a competitive rate or, some sort of loyalty discount or something like that. And sadly not, that's not such a thing anymore. But yeah, if they come to us, then we do get access to all of those products, so we can source not only for the most competitively priced product, but we can also look at the different lenders' criteria and their different policies, because it may well be that the client wants to sort of stretch the amount that they can borrow. So they've seen their dream house and they want to kind of borrow more than their bank or building society might be able to lend to them. So when they come to us, we can look at some different options and try and sort of look at some different products and some schemes that may allow them to increase their borrowing. Similarly, with different property types, locations, things like that as well, then yeah, lenders have got different policies in place where they might be more comfortable than others with lending on particular property types and things like that. So yeah, it's something that it does challenge you as an advisor, because you've got so much to keep on top of at any given moment. But of course, that's why people come to us, so that they know they're going to hopefully get it right first time. There's less likely of an application being declined because, we've gone and we've done the research and we've made double sure that, that lender is likely to be able to help that client and lend on that property. So it's all these pieces of the puzzle to make sure that we're successful in getting that offer in the client's hands.
Yeah. And do you have any particular examples of where you've provided that point of difference, where you've been able to offer something to your client that their high street bank couldn't?
Yeah, absolutely. So certainly with so just thinking of examples where a client may have had some adverse credit on their credit file. So whether it's a CCJ or late or missed payments, or they've had a debt management plan or something. Not every lender is going to be comfortable with that, because obviously there will be a higher risk that client might default on their payments, their mortgage repayment, for instance, and then of course that is going to have an effect on the bank or the lender getting their money back, of course. So I've had it before where I've had a client and they've sort of sat in front of me and said, oh, I've asked my bank and they've said no, and that's so that means I'm probably not going to be able to get a mortgage for a year or 2 years or 3 years. And I've said, okay, well, we've got a range of lenders that we've got access to. Some of them are what we would call subprime lenders, which means that they would look at people with less than perfect credit. And then that means that you might be able to actually get a mortgage this year rather than waiting 3 years and spending 3 years on rent, which it doesn't sound like you want to do, Mr. Client. So with those lenders, typically, you will pay a higher rate of interest, but of course then, again, just going back to the risk for that lender, it's a higher risk if a client is sort of coming from a history of adverse credit. So those sorts of things, I've had success stories with clients, which is really rewarding for me as well, of course.
No, that's great, but it is possible, because I know some of the fears that we will have when we're going to apply for a mortgage is that we can't get one if we have bad credit, if we're recently self-employed, if there are other adverse considerations which make it less likely in your mind to get a mortgage. But you're saying it is still possible if you go to the right lender or if you use the right advisor.
Yeah, absolutely. And I think, again, that's where it might make sense to the client that they can get X amount of money from their bank or building society. But it's down to us to do the research and speak to the different lenders, and we've got relationships with all these different lenders as well. We've got points of contact there where we can sort of liaise with them and sort of help to kind of get that application through to the offer stage. With things like adverse credit, again, another example is where I've had a client come to me and say, oh, I've got squeaky clean credit, I've got no missed payments, nothing like that at all. And then I've asked them to download a comprehensive sort of credit snapshot, which covers all 4 of the different credit referencing agencies, so Experian, Equifax, etc. Whereas they've just sort of checked one of those, and they all report credit quite differently. So a late payment might show up with one of those agencies, but not one of the others. So it is, again, just kind of covering all bases and really making sure we're doing our due diligence to, okay, so which lenders use that credit referencing agency, and are they going to look more favourably on this person's situation? Something like that would be a really good example. And then obviously you touched upon being self-employed as well. So, you've got sole traders, you've got limited company directors, and these are things where different lenders will treat income very differently. So it's about us kind of, looking at the numbers, looking at the paperwork from the accountant, and going to the different lenders and, okay, so this lender will lend maybe £40,000 more than this one. And the client won't particularly, they won't necessarily know that. So again, it's just kind of adding that value to getting the best out of a situation, and ultimately, getting a success story for each client, hopefully.
Yeah, for sure. And on that credit point of view, I know a lot of us are worried about a soft search and a hard search and the impact on your credit score there, and it's something which I don't particularly understand very well. are you usually relatively confident before that application is properly submitted that they will be accepted and they won't then have a sort of rejected application on their credit search?
Yeah, absolutely. That's so important, especially if somebody is, as I say, coming from a background of having impaired credit. You know, it's really important then that we don't take that already slightly precarious situation and then make it worse by just, you know, chucking in a few applications and hoping for the best. So in those situations, it's so important for us to do our due diligence and, you know, get that comprehensive credit report, and really kind of make sure that, you know, we're speaking to the lender, we're giving them all the facts, and we're getting as close to a decision as possible, without sort of, you know, doing anything permanent on their credit file there.
And I suppose that's the advantage of using you or an advisor,
Yeah.
that you can give that advice as to whether or not it is the right decision to submit that application,
Yeah.
as opposed to them doing it themselves direct with the bank.
Exactly. Yes. Yeah. Again, it's about having that time. I think when you're buying a house or your remortgage is due in a couple of months, you've also got everything else on your plate. You might have the kids, a full-time job, you know, you might be studying, you might have all of these things kind of going on in your head, and then, you know, it's then kind of another thing to think about, and you're not going to have the expertise or the time to sort of go to these different lenders and have a chat with them and just make sure that they're going to be happy with considering your application, whereas that is our bread and butter, it's what we do every day. So yeah, it's just about having those conversations as an advisor with your clients, to just kind of make sure you know everything. There's no stone unturned. There's no kind of nasty surprises around the corner, and off the back of that, then that gives us a really good foundation for doing the research, and for as I say, hopefully getting a success story and getting the application to offer stage.
Great.
Yeah.
So tell me about an agreement in principle, mortgage agreement in principle. What is that? And is it something that I should have as a buyer before I start looking for properties? Should I have it after I've found the property that I want to buy? Tell me more about that and what you recommend.
Yeah, absolutely. So yeah, again, anyone can jump on Google, find an affordability calculator, pop some numbers in, and see what number it spits out as to what your maximum borrowing could be. But with a decision in principle, it's the lender getting as close to possible as to a mortgage offer before actually submitting an application. So they're looking at income, they're looking at outgoings, they're looking at your credit history as well, any kind of red flags that would prevent them from lending further down the line. But also ultimately you're looking at the amount that you can borrow. So what I would tend to do personally is say to a client, right, so I can have a look at what your maximum borrowing would be. And then, you know, if you're looking at £250,000 houses, I can say, okay, so you can afford to borrow up to £270,000. So with your £30,000 deposit, you know, that is now your new sort of maximum budget. Whether you buy at that amount is completely up to you, or whether you can find something that is perfect for you at 250, then happy days, go for that. But yeah, it's one of those things where, you know, you want to kind of be as sure as possible that you can afford to buy the house that you are offering on. And I'm sure from your perspective as well, you know, you don't want to be going to your sellers with, you know, an offer and saying, oh, Mr. and Mrs. Jones, they want to offer 280,000. And then we write up all the paperwork and then I put in the application and actually they can't afford that. So then you're having to put the property back on the market. So it's all the different parts of selling a house and buying a house, all kind of working together. And again, it goes back to due diligence, which I know I keep saying, but it's just so important because you know no one in the transaction wants to be disappointed or let down.
I completely agree with you, and I'm very glad that we're on the same page there. In fact, from an agent's perspective, if I am to put an offer forwards to a vendor, I will want that decision in principle so that we know that they have that affordability, proof of funds for the deposit, plus that decision in principle. Because otherwise, as you said, you might not know whether they can afford it or not, and therefore the deal may fall through. So completely agree, and I'm glad we're on the same page.
Definitely.
So I want a mortgage and I want to get one from you. What do I need to take to you? What information do I need to have ready in order to be able to get that sorted?
Yeah, sure. So the basics in a nutshell, you want evidence of your income, you want information around any outgoings, and you want sort of, again, your deposit and things like that as well. So with your income, so if you're coming to me as an employed person, you'll want a few months worth of pay slips. As a self-employed person, if you're a sole trader, then you'll want your last 2 years tax calculations and tax year overviews, which you can access from gov.uk. If you're the director of a limited company, then you'll be wanting your last couple of years accounts, and then also your tax calculations and tax year overviews. There are lenders as well who would look at future income. So I was actually speaking with one of my lenders yesterday, and they said that actually if you've got a signed contract for a job that you're starting 3 months from now, or if you're already in a position and you're getting a promotion that's 3 months away, then actually we will consider that future income, because by the time your mortgage actually completes, you're likely to already be in that role and earning that money. So yeah, that's really interesting, that a lot of people come to me and say, oh, well, I'm starting a new job, so you're probably going to need 3 months pay slips, so I'll come back to you in 6 months' time. And I said, well, actually, we do have these lenders who, as long as they've got the evidence and the paperwork to back that up, they are happy to lend. So that's something that a lot of people probably don't know. And then with your outgoings, so they'd be looking at things like childcare costs, travel costs, what you'll be spending on your credit commitments, so credit cards, hire purchase agreements, loans, car finance. Also buy now, pay later as well is something that's relatively recent, but it is something that now lenders are kind of wising up to, and also they're starting to report it on your credit file and everything as well. So if you're missing your Klarna payments, that's going to come back to sort of rear its ugly head at a later date. So yeah, all of your outgoings. So that's where the bank statements come in, and I'll be sort of trawling through the transactions. And again, I always get people saying, oh, don't judge me. I went to KFC, 5 times last month, and, please don't judge me. And I say, I'm not here to judge you. I'm here to just make sure that when I go and do that decision in principle for you, I've put in all of the information about your credit commitments and things like that, so that I don't get sort of red flags all over the application saying, oh no, you haven't disclosed this, that or the other. So that's really, really important. So yeah, it's all these kind of different things, and address history as well, ID, all these kind of different components to sort of really building a picture for the lender, to make them comfortable with lending you a 6-figure sum of money, essentially.
Yeah, and on that outgoings front, because I think that's an interesting point, how much of an impact does it make if I say buy a new car on PCP finance or something 3 months before I decide to buy somewhere, or take out a new credit card a few weeks before launching an application?
Yes.
Do they play a big role in how likely you are to have your offer accepted?
They can do, yes. So that is a really good question, because it is something that people have sort of fallen foul of previously, and they've got their mortgage offer, they're a couple of weeks away from exchange of contracts, and they've thought, oh, actually I could do with a new car, or I'm going to order that sofa set for my new house and I'm going to put it on finance. And then it doesn't happen every single time, but sometimes the lender will re-credit score a case. They'll kind of reassess it even after it's gone to mortgage offer, and they'll say, oh, well, this person didn't disclose that they were going to have this credit, and now they have. So we've gone off this, and then it's up to us to kind of hurriedly go back to try and find them an offer again, and hope that the affordability still fits with a different lender. So yeah, that is a really, really valid point.
So if you're looking to get a new sofa or something for the house you're buying, wait until exchange of contracts.
Absolutely, yes. Yeah.
Definitely. Yeah. And that process, so from first reaching out to you, Beth, to going through all of that information that we've discussed, to actually getting to point of mortgage offer, how long does that take usually?
Yeah, it's a piece of string answer, I'm afraid. So yeah, it really depends on the lender. It depends on their timescales as well. Sometimes you've got a lender who, there's actually lenders now who do kind of AI generated sort of mortgage applications. So you'll put in the details, it'll do an instant valuation, and you can actually get, or it is possible rather, for some people to get a mortgage offer within that same day with those particular lenders. On the flip side of that, you might have a case where it is really complicated. Maybe the valuer wants to go out and see the property themselves rather than do a desktop valuation. So of course that's going to sort of string it out a little bit longer. There might be a lot of questions about somebody's income, if it's not pretty standard, or bank statements and things like that. So yeah, there's a lot of variables, a lot of moving parts. So I think the average last time I checked was between sort of 4 and 6 weeks, or 2 and 4 weeks. I should have looked this up, to go from application to offer. But yeah, with all those variables, that of course will change all the time.
So there's a big sliding scale there, right?
Yes.
It could be 1 day, it
Yeah.
could be 6 weeks. Better to be prepared and
Yeah.
get going on that from the very, very start.
Absolutely, yes. Yeah, it's definitely one of the first things you should be doing. And as you say, where you kind of start working with your advisor before you even offer on a property, they're already going to have all that information. So it should be the case where that helps them to kind of to get going and make it hopefully faster for you, so that you've got one thing ticked off the list of your house buying to-do list, and then that sort of you can breathe a bit of fresh air then, and a sigh of relief, because you've got your finance behind you.
Yeah, definitely. And we're talking about the administration process there of getting to the mortgage offer and all of the information needed for that we've discussed.
Yeah.
What about deposit? How much of a deposit do I have to have? 10% people always seem to talk about. Is that the case? Can it be less? Can it be more?
Yeah, it can be both, certainly. Yeah, so with the way the interest rates work, so the more competitively priced products are reserved for those with a bigger deposit. So if you've got a 40% deposit, you won't be paying as much interest as somebody who has a 5% deposit. So yeah, ideally you would have more money, but that's just life, isn't it? Ideally we'd all have more money, and that would help us through everything. But we do have, particularly sort of in the last few years, where there's been a lot highlighted around people kind of struggling to get on the ladder, first time buyers who, they've been renting 10 years and they still haven't got enough money to go and get on the ladder. And of course in this country it's very kind of, it's encouraged that people own their own homes. So there are a lot of lenders now who are bringing out the products such as the 95% loan to value mortgages, concessionary purchases where perhaps you're renting and your landlord wants to sell their property that you're renting and you quite fancy buying it, so they can knock off sort of 10% of the purchase price, and that 10% discount can act as your deposit. So that's a valid thing with a lot of lenders. You've also got a lender who will even lend 100% of the property price, based on if you've been renting for 12 of the last 18 months. And in that case, they'll kind of look at, okay, how much rent have you been paying? £1,000 a month. Okay, so let's look at how much your mortgage would be for the repayments to be £1,000 a month, and they'll kind of match that so they can help you get on the ladder as well. So again, it's all these different things where the lenders will send their business development managers to us as the mortgage brokers, as the people talking to the end customer, and they will kind of sell us these new schemes and these new products, because they know that we know people that need them.
So there's lots of different options, lots of different opportunities
yeah.
and products you can go for with a bigger deposit or a smaller deposit, or as you're saying in some cases, no deposit at all.
Yeah, absolutely.
Great. And we've spoken mainly about residential home buyers or first-time buyers, but at Flower Property we work with a lot of investors as well, a lot of buy-to-let landlords. How does it work on that side? What are the differences in applying for a buy-to-let mortgage as opposed to a residential mortgage?
Yeah, absolutely. So it's a lot more to do with the rental income that you will receive as the owner of that property. So if you've got a property that's worth £500,000, but the rental value is only £450 a month, or your tenant is only paying you £450 a month because you've known them for years, and you're happy for them to just kind of sort of to pay a minimal rent, then lenders are going to look at that and think, well, these numbers don't stack up. Even if you're only looking to borrow a small amount, then they're going to want to see that this is a solid investment. So again, that's sort of something that we will look, and that will be one of our first questions when we're talking about a buy-to-let remortgage or a buy-to-let purchase.
So the rent is the most important factor there, what it's going to rent for, what that's going to create.
Yeah, absolutely, yes, yeah. Is it worth it as an investment? But on that note, there are lenders who would use something called top slicing, which doesn't sound very friendly, but it is a good thing. So it's what they would put in place if a property's rental value or the current rent being received isn't quite stacking up to the loan amount or the property value for sale. If that client who's looking to borrow the money earns a certain amount, then they can combine the rental income with a bit of their earned income to sort of top up the difference, if that makes sense to do. Yeah, so there's all these kind of little intricacies and there's little kind of loopholes, I guess, to get around it there.
No, very, very interesting to hear the different opportunities there are there as well, that there seems again that there's not one set of rules. It's about working with someone like yourself to see the different options and work out what suits best for that individual client, as opposed to sort of a one size fits all that you might get with a high street bank.
Absolutely, yeah.
So we've talked a lot about different mortgage products and what you should look for. Part of that is the length of the product, how long you're looking to take that mortgage out for. Is there a particular length you should look for? Is there a right length? Tell us more about that.
Yeah, sure. So with the length of the overall mortgage term, that is a lot where the advice comes in. So we'll be looking at sort of how old you are, what occupation you do, your monthly budget for the mortgage payments as well. So yeah, with your age, if you're in your 20s and you're buying your first place, or in your 30s, you're going to be able to access sort of the longer mortgage term, which is going to allow you to keep the monthly repayments down. If you're sort of looking at occupation, then somebody in a desk-based role where they're quite sort of sedentary, they're going to be able to have a longer lasting mortgage term because they're going to be working, going to be able to work sort of longer than somebody who is, a builder or someone who's doing something a lot more physical, where it's going to have more of a toll on your body and your sort of your how late in life you can work too. So yeah, it is a real. There's a lot of variables. I know I keep saying that, but yeah, there's a lot of moving parts where there's a lot to consider in terms of sort of how long the mortgage term should be. Ultimately, though, it's worth remembering that by having a longer mortgage term, yes, that will bring your monthly repayments down to a more comfortable level. But of course, by paying interest for say 40 years instead of 20 years, you're going to be paying interest for longer, and of course then ultimately you will be paying more interest. So that is certainly something to take into account.
So again, as we've discovered with a lot of these questions today, it depends.
Yes.
And the thing which is probably best to do is to speak to someone who knows more and to get the right advice from that professional. You're clearly very passionate and enthusiastic about what you do. Yeah. Tell us what you enjoy most about the job.
Yeah, well, nothing beats the buzz of seeing an email come into your Outlook saying you've got a mortgage offer for a client. So that's always makes you do a happy dance. So that's always a good a high point. But yeah, ultimately, it's the reason I do what I do is because I really enjoy helping people. So whether it's first-time buyers and they've gone on viewings, they've gone on Rightmove, and they're thinking we know we want to buy a place, but we're absolutely terrified, we're finding it really daunting, then I really like to kind of, give them the support that helps them kind of know, that helps them feel confident in getting a mortgage and moving into the property, and, that even the sort of the legal side of things, I will try and kind of help through as much as I can. But yeah, and then you've got people who are remortgaging, for instance, and there are people who have always known their interest rate to be sort of 1 point something or 2 point something, and then of course they're coming up to the point of renewal in today's market, and all the interest rates are starting with a 4 or a 5. And it's kind of just thinking outside the box and you know, assessing everything, looking at it holistically, and coming back to them with you know, a product and a recommendation that hopefully isn't too scary. So yeah, definitely being able to help is my number one sort of motivation for doing what I do.
Great, fantastic. And I've asked the other people I've interviewed if there's anything else they want to add, which I haven't asked you. Is there anything in particular that springs to mind for you that you wanted to add? Anything important to share?
I don't think so. I think, you know, people ask what should I look for in a broker. I think it's like with anything that you instruct a professional for, an expert for. I think you've got to look at finding somebody who you can have those frank conversations with. You can ask the silly questions and not feel like you're being a nuisance, and you can really kind of have that professional relationship. I think especially with a broker, and you mentioned before we started filming, you know, you're potentially going to be working with your mortgage broker or mortgage advisor for the whole lifetime of your mortgage. So if you're a first-time buyer and you find a really good advisor, then you might be seeing them every 2 years or 5 years, right up until you become mortgage free. So to have that relationship with somebody is really valuable, really important. So yeah, that would be my top tip, I think.
Great, thank you very much, Beth. It's been absolutely fascinating. I think everyone who's watched or listened to this episode will see the advantage of using a broker, of employing an expert to help them through what is a difficult journey to navigate. There are so many different things to consider when looking at mortgages. People will have watched today and I'm sure want to reach out to you in particular. If they do want to reach out to you, Beth, how should they go about that?
Yeah, sure. So I'm on Google, I'm on Facebook. So yeah, if you search for HHH Mortgages, then you will find me on the company website. I am self-employed, but I work for a brokerage with several other brokers sort of working under the same brand. So yeah, I'm based in Corsham in Wiltshire, but yeah, I can pick up the phone or go onto a Teams call with the wherever you are in the country, and yeah, more than happy to do so. So yeah, give me a Google and we'll go from there.
Great. For everyone, HHH Mortgages then is HHH Mortgages, right?
That's right, yes. Yeah.
Perfect. Thank you very much.
Thanks,
you. Beth. I've been Jack Flower. Thanks for watching. See you next time.